It rose 11% in the first 3 weeks of this year. Now, Nigeria's equity market is down 9% from its peak. General elections have been a dampener, and foreign investors, big hitters on the exchange, have shied away. But some analysts think the fall is an overreaction and feel hot stocks are aplenty. Analysts at ARM, FSDH, and CSL stockbrokers list Nestle Nigeria. The subsidiary of the global food company is the highest priced stock on the bourse. Many suggest this valuation is rich relative to peers, but point to strong earnings growth through expansion.
In Nestle's case, it appears to be richly valued compared to its peers. It's in the very high teens in terms of relative valuation compared to its peers, which are in the low to mid teens. But if you look at it from a growth perspective, seeing that Nestle is not really challenged on the growth front, despite being big, despite being dominant, it still has a lot of opportunities. It's moving into areas that have a lot of growth potential going forward, and we still see that growth coming through. It's not something we believe the markets has priced in already, so we think that is going to materialize over the next few quarters.
Another name analysts like is Flour Mills. This diversified food and cement manufacturer is another play on Nigeria's large population and infrastructure deficit story.
This is a company that's very dominant in its primary product, flour. In its case, it's trying to forward integrate into things like noodles and other consumer products. The key thing that's happened in that space for us is the fast improvements in distribution that could come from the rail projects that are ongoing across the country. For flour mills, it's a very important development because it gives them access to many markets where their products are in high demand, to which they haven't had access hitherto. So access is a very key story as far as flour mills is concerned.
Interestingly, very few banks are ranked among the top picks of the analysts polled. This perhaps is due to the recent earnings season, where banks like Diamond Bank and UBA have released disappointing results. But analysts at Vertiva Capital Management and CSL stockbrokers still recommend Diamond Bank. They cite the strong underlying growth story for the SME-focused bank, which was marred by unexpected provisions last year. Analysts at BGL and FSDH list GT Bank as their top pick, dismissing the significance of recent reports about the poor health of CEO Tayo Aderoku. With a return on average equity of 18.9%, GT Bank is regarded as one of Nigeria's most efficient and profitable banks.
Guaranty Trust Bank has created a niche market for itself, and if you look at the performance of the banking sector in the last 3 years, even in the middle of the global economic crisis, GTB seemed to have weathered that storm and more or less even within the storm to continue to emphasize itself as, in the top 2-3 banks in Nigeria. There are speculations around the health of Tayo right now, but when you think about it, Segun's been DMD for almost 5-6 years now, and he's become the face of the bank in the last 3-4 years, and the bank has continued to grow even with reports of Tayo's health.
And so while the outcome of Nigeria's elections may be in doubt, demographics and the recent market pullback should offer some interesting opportunities for the discerning and the brave.